So we're going to be discussing OZ 101. Basically, it'll be just a general information session, kind of a crash course in opportunity zones for anyone who might be new to opportunity zone investing. Well, here's my friend, Andy Hagans. Andy, how are you doing this morning?
I'm doing great, Jimmy. I'm very excited to be here.
Good. I'm excited to have you here. For those of you who don't know, Andy Hagans recently joined me as my partner at the Opportunity Zones database, opportunitydb.com. He's helping me produce the event today. And we've also recently co-founded a sister property, AltDB, the Alternative Investment Database. And he also co-hosts the Alternative Investment Podcast with me there. And so, Andy, turning to you now, I want to drill into OZ 101 in a few minutes. But first of all, just zoom out and give me the bigger macro picture. Why should high net worth accredited investors look into diversifying into alternative investments? And what's the case for opportunity zones specifically within that alternative investment universe?
Well, that's a great question, Jimmy. You know, you and I launched the Alternative Investment Podcast about 2 months ago now. And of course, we thought it would have a positive response, but we were actually blown away by how much interest and excitement there is in the alternative investment space. So, we asking ourselves why? Why is there so much interest? Well, historically, there are three reasons that high net worth investors invest in alternatives. And I'm going to add a fourth reason as well today, but that first reason is higher returns, right? Investors are looking for alpha. And historically, a lot of the segments within that alts universe have delivered very high historical returns. So that's the first reason, is just alpha. The second reason is portfolio diversification, right? So investors are also looking at that overall return for their entire portfolio, especially on a risk-adjusted basis. So a lot of alts are either lightly correlated or non-correlated, or sometimes even negatively correlated with those traditional investments of stocks and bonds. So they offer a diversification benefit relative to that entire portfolio. Okay, the third benefit of alts, and why a lot of investors are looking very hard at them right now, are the tax benefits. Okay, looking at that entire alts landscape, of course, we have direct investment in real estate, 1031 exchanges, Delaware statutory trusts. Those all have significant tax benefits. We also have energy programs and other types of limited partnerships with tax benefits. We also have, of course, qualified opportunity funds and QOZBs. Those have perhaps the best tax benefits of all. And of course, some of the reason why this interest level is very, very high right now, speaking in November of 2021, is of course, Congress is discussing how they want to raise taxes, of course. Now, thankfully, some of the more harebrained schemes, like the mark-to-market idea, the most absurd ideas have already been tossed into the garbage heap. But now they're discussing adding a surtax on individual incomes at that top bracket. So, and I think an investor in a state who's living in a state with high state and local taxes has to look at that overall income tax rate, where their tax bracket all in may exceed 50% once you include the federal surcharges as well as that state and local income tax, right? So I think investors are looking at not just returns, but triple net returns, right? Returns after inflation, after fees, and after taxes. And because of that, especially with their taxable accounts, they're taking a very hard look at alts right now. But it's not all just about money. That brings me to my fourth reason that investors are so excited about alts, Jimmy, and that is impact, right? Whether we're talking about everyday retail investors or high net worth, very high net worth, ultra high net worth, even institutional investors, they're all excited about being part of a positive story. I mean, look at the newest alt on the block, crypto, blockchain, Bitcoin, Ethereum. Investors want to be part of that story. They're excited about that story, so they're investing in that alt. And of course, I'd be remiss if I didn't mention opportunity zones, right? There are so many wonderful opportunity zone projects that are investing in our local communities across the United States. And I think personally, as an investor, I'm very excited to be a part of that story. So I think, 1, 2, and 3, returns, portfolio diversification, tax benefits, that's the financial aspect. But investors are also looking to make an impact with their money. Now let's zoom out a little bit though. Why now? Why Q4 of 2021? Let's look at that macro picture, right? So we're coming off of a year where inflation has been north of 5%, or depending on who you talk to, maybe 6 or 7%. And I think investors are beginning to ask themselves, what if inflation sustains at 5% plus for the remainder of the Biden administration? Okay, if you have a taxable account, take the bond market. Let's say you have a bond fund that's yielding 4%, 4.5%. Well, after inflation is taken into account, the yield on that bond fund is actually negative. Okay, but it gets worse, Jimmy. It gets worse. Okay, because that bond fund is going to be taxed based on its nominal income, right? So after inflation and then adding on taxes, that's just driving the yield on that bond fund even further. So I think investors are beginning to realize that if inflation sustains at 5% plus for the remainder of this administration, their bond funds could get murdered, especially in taxable accounts. So I think that's one of the negative reasons that they're looking hard at alts. But now let's talk about something more positive, Jimmy. And that is that qualified opportunity funds are a very attractive opportunity. So I was talking with Ashley Tyson, who is the founder of OZ Pros, a couple weeks ago, and he said, you know, even after this recent run up in the real estate market, there's still a lot of attractive opportunities right now. But he also said, if it's not in an opportunity zone, I don't even look at it. And so I laughed, but I said, that makes sense because this program offers massive, massive tax benefits. Okay, we have a lot of investors at the after a couple of years of a bull market. I mean, especially since the COVID lockdown. So we've seen these incredible bull markets in the equities, and so either they've realized some capital gains or they have potential capital gains that they could realize. And now I know you're going to cover this, Jimmy, but on December 31st of this year, we have one of the tax benefits of the Opportunity Zones program that will be sunsetting. So personally, I feel like it's just the perfect timing to realize a capital gain, to redeploy it into an attractive alternative investment, namely a qualified opportunity fund, and enjoy that extra 10% reduction in that initial capital gains tax owed. So I really think the time is now. I'm very excited to watch all of our funds present, right? We have sponsors that are making incredible impacts in opportunity zones across the United States with their projects. And I think there's also a lot of opportunities for attractive total return. So I'm excited to watch all of these presentations, Jimmy. And I also want to thank you for putting today's event together. I'm very excited for it.
Oh, well, thank you, Andy. Thanks for being here. I think the kind of the key point you made in the second half of your talk was I think we're at an inflection point right now with opportunity zones. There's a lot of momentum leading the way forward. So Andy's given us the macro view on why alts and why opportunity zones in particular. I now want to walk everybody through an OZ 101 crash course, essentially. So this is meant to be just a very quick intro to opportunity zone investing. I'm going to cover it at a very high level and just walk through what are the benefits for opportunity zone investing. So for those of you who have been following me for a while or already know about the program, this may be review, but I know we have some new investors on the call today who are just first starting to learn about opportunity zones. So this is really aimed specifically at you. So opportunity zone investing 101. There's my legal disclaimer again. This is not legal or tax advice. Some of the things I want to go over here, and this is just going to be about 9 or 10 minutes here because we do have Michael Episcope at Origin Investments joining us shortly. And I'll get him on stage when I've wrapped up. But I'm going to go through an overview, some facts and figures, and then most importantly, how to invest, and then some additional resources if you'd like to learn more. So first of all, the opportunity zones, tax benefits, and it all starts with a capital gain. That's the one key thing that you have to start with. This is a capital gain tax benefit. So it doesn't apply to ordinary income. It doesn't apply to any money just sitting around in your savings account. You have to generate a capital gain in order to get going with qualified opportunity zones. Now, the gain can come from anything. Come from the sale of stock, bonds, any publicly traded securities. It can come from the sale of private business, collectibles, crypto assets, comic books even. As long as you generate some sort of gain, You can then roll the gain over into a qualified opportunity fund that deploys that capital into qualified opportunity zone property. As long as you roll over that gain within 180 days of recognition, you get the following 3 benefits associated with it. Benefit number 1 is a deferral period. You get to defer recognition of the gain until the end of 2026. Benefit number 2 is a reduction in the amount of gain you recognize. You get to reduce the amount of gain by 10%. And then benefit number 3 is the big one. You get to eliminate capital gains taxation. So let's walk through an example right now. In our example, a taxpayer, let's say, has a $10 million capital gain, and we'll assume a 23.8% federal capital gains tax rate. We'll ignore state taxes for now, just to keep it simple. But there's most states across the US also kick in this benefit as well. So normally a taxpayer would owe $2.3 million in capital gains tax liability the following April, which would leave that taxpayer with only 7.62 million net. But instead, the taxpayer rolls over that gain amount into a qualified opportunity fund within 180 days. Benefit number 1, that deferral period. So essentially, that taxpayer is receiving a $2.38 million interest-free loan from Uncle Sam. That has great value right there, just in and of itself. Time value of money, and just more money you're putting to work for you. You're putting in $10 million instead of just the 7.62. That's additional compounding in your OZ investment. Now, important to note is that tax on that $10 million gain does eventually come home to roost. So you will need to have some liquidity in 2026 and 2027 when it's actually due. And an important tax rate risk, the 2026 rate applies. We think tax rates look like they're going up, but I actually think that could be to your benefit in the long run, as you'll see when we get to benefit number 3. Benefit number 2, you get a reduction in the amount of capital gain that you recognize. So your $10 million gain, so long as you hold your opportunity zone investment for 5 years prior to the end of 2026, you get to recognize that gain of $10 million as only a $9 million gain. Now, if you do the math on that, you can't achieve a 5-year holding period prior to the end of 2026 unless you get your investment in before the end of this year. So as Andy rightly pointed out, this benefit does expire after December 31, 2021. So we've got about 8 weeks left before this benefit expires forever. I'll put an asterisk by that because forever may change. There is some pending legislation that may or may not get passed that would extend the opportunity zone benefit by maybe a couple years or so, which would reopen this window. But for now, no such legislation has been passed. And in lieu of any congressional action, this benefit is set to expire at the end of this year. So in our example, the $10 million gain gets reduced to $9 million, as I noted. And finally, benefit number 3 is elimination of all new capital gains that are derived from the opportunity zone investment. So you pay 0 tax on capital gains realized from the opportunity zone investment, so long as you achieve a 10-year holding period. You get tax-free growth basically within the OZ investment. If we've likened it, my partner Ashley Tyson at OZ Pros and my partner Andy Hagans here on the call, we've likened it to a super Roth IRA, essentially. Let's say in our example, the $10 million appreciates to $50 million, a little 5x return over the course of a decade or so. You would owe $0 on that $40 million capital gain. Normally you'd owe an 8-figure tax bill on that, right? So now important is that the OZ gain must be recognized prior to the end of 2047. That's written into the regulations currently. Now, if tax rates go up, as I mentioned in point number 1, this actually benefits you in the long run, right? You can, I think what we've seen is, and what Andy touched upon, is this huge run up in the equities market. Some investors may be drawing out of the equities market or other investments and generating a capital gain. Where are you going to put that gain? You need to pay taxes on that gain, and but eventually you want to probably put it somewhere into some sort of other investment fund or other investment product. But eventually that investment is going to generate more capital gains taxes down the road. This is really the one place where you can take gain from anything and put it into a qualified opportunity fund and not care if tax rates go up, because you're not going to pay any taxes on the back end. So here's the impact of what this tax benefit does to returns. And thank you to my friend Jill Homan at Javelin 19 Investments for drawing up the model that produced these. There's a few assumptions built into these charts, right? A particular tax rate and a particular rate of return. But let's assume IRR first in this top chart here. A taxable reinvestment, like I said, you're going to pay taxes if you take that gain and put it in something else. Let's say the taxable reinvestment has an IRR of 8.28%. Well, the opportunity fund equivalent would have an IRR after tax of 12%. So that's how it juices those numbers there. The after tax multiple here in the second chart, taxable reinvestment has let's say a return of about 2x, 1.97 here to be perfect. And the opportunity fund equivalent would have a 2.68x return. So it quite a big difference in what the benefit does with both returns and the after-tax multiple. There's a fourth hidden benefit that I don't oftentimes talk about. I should talk about it more. On a lot of these opportunity zone investments, particularly these real estate projects, there's massive depreciation that gets passed through to the LP investors. One of the beautiful parts about the opportunity zone tax incentive is that depreciation recapture gets eliminated completely, which can be a lifesaver for capital intensive businesses. So I've got like another minute or two here. I may just cut it short there and see if we have any questions from the audience. Very quickly, I'll kind of show you where the map of where all the opportunity zones are in the country. They're all over the country here, and how to invest. Let's get to this really quickly before I open it up to a couple of questions before we bring Michael on stage. Really, we're looking at any taxpayer with a capital gain can take advantage of opportunity zone investing. You do have to invest through a qualified opportunity fund. You can't simply put the money into a project directly that resides in an opportunity zone. All of the partners that are presenting on the course of today and tomorrow's event are qualified opportunity funds. They're open, they're ready to receive capital. You can also invest in your own OZ project through your own QOF that gets created. And Ashley Tyson's going to be discussing that a little bit later during his workshop today. So with that, I'll kind of shut it down and see if there's any questions. Lucy asks, when do you pay the capital gain? It looks like Andy's already kind of answering your question there. Lucy, I see he's typing the response to it, but the capital gain from your initial capital gain, let's say you generate a gain today, right? And you roll over that gain amount into a qualified opportunity fund in the next 180 days, let's say before the end of the year. The gain that you generate today would be deferred. The recognition of it would be deferred until the end of 2026. So the tax bill on that would be due April 15th of 2027. A little asterisk there. Sometimes your accountants want you to pay estimated quarterly taxes. So you may be paying estimated quarterly taxes throughout the course of 2026 if you already know that gain's coming due at the end of 2026. So I would encourage you to have a discussion with your CPA about the exact mechanics and timing of that. But typically the due date is April 15, 2027. So with that, I need to wrap it up. I want to thank Andy for jumping on with me today. Andy, you still there? I don't know. Let's see. There he is.
Still here, Jimmy. Really enjoyed that presentation. And again, I think any investors who are sitting on the fence because of that benefit going away on December 31st, I think they should really pay attention to the pitches today and tomorrow, because we got a lot of great funds here.
Yeah, absolutely. All right. Well, Andy, thank you so much again. Really do appreciate your insight.